Yes, people, welcome back to a new video on the channel. I'm quickly going to break down risk-free trading, runners, whatever you want to call them, and how I implement them into my trading, which has helped me compound my account quite largely over the past couple of years. So basically what I'll do to start with, because I know some people are cynical, I'll quickly show you that I am actually in these positions before we go off anything. So as you can see, I'm in the sell, I'm also in the buy from down here, and these arrows show that I did take profit on the position down there. Okay, so now that's done, let's look at the position. Last week, I broke down on the YouTube channel this buy area here, which I did end up taking, and I showed you in the last video. So what I don't want to do is break this down and waste people's time. If you want to see the reasoning for this position, it's in the last video. Okay, so now what happens is that if I am looking to take a counter trend position, which is what I like to do when I have an open trade, I want to basically try and make as much money as I can without increasing my risk. Now, for some people, that's going to be a confusing sentence, but basically, I'll break it down. Let's assume on this position down here, you risked $100. Okay? Price went to your first take profit and you closed half of the position. So let's say, because what we'll do it this way, at 1-to-1, if you risked $100 on this trade, you would be running $100 into profit. Okay? So what you would do, assuming this was your method of take profit, you may close half of the position at 1-to-1. You then closing half the position at 1-to-1 means instead of 1-to-1 being $100, it's actually $50. So basically, for every, in this situation, 20 pips this trade moves, it's $50. And bear in mind that your initial risk was $100. Okay? So if you identify a sell area like I have here, I'll quickly break down the reasoning. I have a Fibonacci 78. I also have a structure level to the left, and I also have a round number. So for me, this was a position I was interested in taking. Now, if this is a position I'm interested in taking, because I use limit orders, I can pre-plan the trade and what it's going to do. So I know that on this position, I'm going to have a 20 pip stop loss, meaning if this trade triggers, this trade down here is going to be running 3-to-1, which it is. Okay? Also, what you want to take into consideration is that you don't want to do it based off this, you want to do it based off where your stop loss would be. So I know if this trade, and I'm in from a tiny bit lower, so it's 4-to-1. So this position here, if it hits my stop loss on the counter trend, it would be running 4-to-1. Well, if I've got my $50 per 20 pips, that means you times that by 4, and then now you have $200 open running position. So what you can do in this example here is instead of risking your normal $100 a trade, you can either risk $200 and risk the full runner. You could risk $100 of your own money and then $100 of the runner. So you could risk a normal amount of 1% and add another percent risk free. And then that is basically the way to do it. So in this position here, you are now able to risk, if you wanted to do it to the max, $200 risk free, meaning it will not come off your balance, it will just come off your unrealized profit. And then therefore now I am not going to lose money on this trade, even if it loses. And that's the biggest thing. Trading is all about risk management and being able to obviously stay in the market for as long as possible. And by what I do with runners in my strategy, this allows me to basically take a lot of positions without actually risking any of my own money. Once that happens, if you start getting back-to-back trades, so let's just assume you risk your 200 on here, and then obviously you had a buy area here, then obviously if you was to close half, every 20 pips, instead of being worth $50, is then worth $100. And if you can continue playing that back and forth, then you are in for some really good profits. So as mentioned, I've shown you I'm in the position now. This is what we're looking at, and I will update you as and when something develops. A quick afternoon update now on New Zealand dollar, US dollar. You can see prices in a slight bit of drawdown. We've just had news come out for the dollar. It was the PPI news. So as you can see, it was a negative reading across the board. that then means dollar weakness. And obviously in this trade position here, we are ideally wanting dollar strength. Now it doesn't matter because we are still in the buy, obviously. So we'll just have to wait and see what's happened. I would hope that the news did have a larger reaction, but it didn't. So now we've just pretty much got to wait and see to what price does. So as mentioned earlier, any developments with break even, stop loss, anything like that, I'll let you know. But for now, this has been a very slow and boring position. So we are back now on NZD USD. I'm semi-happy, obviously not initially due to the fact that it was potentially going to be a winning trade, but I'm happy that I can show you this example and show you live how to manage this. So as you can see, the sell, that was risk-free by the way. So what I basically do with my strategy, I need the dollar or the yen to line up with my pairs. Once my trades are open with a good setup, I will then take weaker setups where I don't need alignment. So this was a trade without the alignment, okay? And that's why I only took it risk-free. So if we just quickly look, if I get the deal map up, you can see now, looking at this position, that the trade has lost. So my buy is running 80 pips, 81 pips, and the trade has stopped me out for roughly about 60% of my open position. So then all I am going to do is close the 66% of my open position. And then therefore, it will allow me to keep the runner from the downside, but also following that, it will allow me to keep the trade open as well whilst covering the loss. So if you look here, that noise there, if we look, I have just closed a portion of my position, which has now allowed me to not take a loss on the day. And it's as easy as that. So if I was to look at my trading panel now, let's have a look. I'm break even on the day, pretty much give or take by £1. Okay? So what we do in this situation now, we literally let this trade run. It is now a risk-free buy. So now the buy is open and, it's running 4-1. And the sell that I did risk has obviously lost. So that here was a live example of how to use runners to benefit your trading. So I've taken a trade today which lost, yet I've not actually lost any money. And I hope that kind of puts it into perspective for you. So what I'm going to do, guys, I'm going to end the video there. If there's any questions on how to use the runners, etc., or what you've seen in this video, please let me know. And otherwise, I will see you in the next video.